In market news now, China's stocks jumped on the back of the Lunar New Year. The dollar was steady after data last week showed U.S. inflation remained sticky, and this has cast doubts on whether the Federal Reserve would start its easing cycle. Meanwhile, the shares of Northern Platinum fell about 6% earlier after it warned shareholders that a climb in production in its interim period hadn't been enough to offset slumping prices. Headline earnings per share could fall as much as 97.5%, and it is also still counting the cost of its failed bid for Royal Bafokeng Platinum. To give us more perspective on the markets, we are joined by Gary Boyson from Rand Swiss. Gary, thank you so much for your time this afternoon. With U.S. markets rather closed for the President's Day holiday, how are markets faring right now?
So as expected, volume is a little bit lower than usual. We've got the all-share index that's drifted down about 0.2%. Resource index down about 0.5%. Industrials also down around 0.25%. The financial 15 is flat. So I think there's a lot of big news out later in the week, and everyone is really just waiting to see what's going to happen with the budget, what's going to happen in the FOMC minutes, what's going to happen with inflation, what's going to happen with South African unemployment. So there's a lot of stuff coming out. You get the sense that the market's just trading water at the moment. We've got the gold price ticking up marginally. We're back above $2,000 an ounce, trading to 2017 at the moment. The local currency against the dollar. The dollar is still firming up over the after those weak U.S. economic data points last week. So still sitting at around 18.90 now, just a touch under 19 rand to the US dollar. And yeah, it feels like we're in a holding pattern at the moment.
Let's talk about Amplats results and as well as the restructuring plans that could impact about 3,700 workers. Looking at the share price reaction, that's up about 1.3%. What did you make of the figures?
So obviously very, very disappointing, but I don't think unexpected, and that's why you're not seeing a big move in the underlying share price. Seeing, as you say, marginally positive on the day around the announcement of that restructuring. It's a fairly significant restructuring. They're looking at essentially laying off about 17% of the overall workforce. They're looking at 620 service providers as well, and it's probably going to result in around 3,700 job cuts if it goes through as expected. But it's not unexpected. We saw the basket price, the PGM basket price falling around 35% over the reporting period. That led to a 71% decrease in profits. But this is a function of a mining company like Amplats in that there's high operating leverage. When prices come down and you have this big fixed cost base, you tend to see a big hit on earnings. So I don't think the market's too spooked on it, but they do have to make long-term decisions to keep the business alive.
It's quite interesting, and I'm going to take things stateside here to look at the data that we got last week out of the US. Given all of that, given the comments coming out of the Federal Reserve, in your mind, what would be the Federal Reserve's nightmare scenario as it relates to inflation or growth?
I think last week it almost played out for them. So it's certainly the case. The nightmare scenario for any central bank is stagflation. It's an environment where you have low growth, high unemployment, but inflation is still not under control. And we know that the Fed clearly has a 2% target. And the data that we received last week, clearly didn't support, cuts, certainly not in the March meeting. And if I look at Fed funds futures, if you look all the way out to the June meeting, there's still around a 25% chance they won't have moved by June. So you're getting the narrative that this is going to be higher for longer. People that were hoping for a rate cut from the US in the first half of this year might be disappointed if we continue to see poor data prints. Of course, it's always very, very data dependent. Looking at that inflation number, you had seen the consensus drifting lower and lower and lower as this optimism moved into markets. We saw the consensus figure drop to 2.9% level. It looked like a little bit of a stretch. I know we were saying ahead of the number, we think 2.9% is maybe a little bit too much. It came in at 3.1. It was a miss. And we saw markets react accordingly. As I said, we've seen a firming of the US dollar. We've seen a move back to some of the more safe haven type instruments. And it's still just the Magnificent Seven carrying the market.
On Wednesday, we've got Nvidia releasing their results, and it was quite interesting for me to see the year-to-date performance of this particular company. I think, if I'm not mistaken, just over 46%. How high is the bar for this company to be able to deliver the numbers we're expecting?
It's an incredibly high bar. So it's 46% this year so far, and we're in the second month, and it was around 240% in 2023. So, significant performance from the company, but, so far has been backed up by the underlying earnings. So, the expectation is for revenue to come in at around $20 billion US. This is up from $6 billion US. So massive top line growth for the company. If I look at, the estimates out, 1 year and 2 years forward, you're expecting that 20 billion to grow to around 60 billion. And the consensus expectation is to be at 100 billion in 2 years' time. So just incredible demand for these chips is what the market is looking for. That obviously creates a risk that if the company doesn't deliver on this, or if the outlook from the company is not optimistic, you could definitely see a big correction in the stock price, because there's a lot of future success baked into this one. But if you look at what OpenAI has just released through Sora, which is its new text-to-video product, it's absolutely incredible. They've released some research, and it really just highlights how important the compute is for these AI firms. They have to get hold of these chips. What they're building is just so incredible, but it's going to require chips, and those chips come from Nvidia. So let's see what their pipeline of business looks like. Let's see what the earnings look like on Wednesday. Very, very expensive stock, but an incredible story behind it as well.
All right, Gary, thank you so much for your time. Let's leave it there. That is Gary Boyson from Rand Swiss. And as I mentioned, U.S. markets are closed for the President's Day holiday, but a lot of the volatility is expected to come out of the NASDAQ 100 when I mentioned that Nvidia is going to be releasing their results. As Gary said, up 46% so far this year. So the bar is quite high for this particular company to deliver earnings. And if we do see earnings meeting expectations, we could see the NASDAQ 100 rise even higher, even though we did see it breach just over 18,000 points. And if it is lower, that is from a results perspective, the NASDAQ 100 could be a little bit lower, but we are going to be monitoring those numbers for you. We're going to take a quick break, and when we come back, we'll have a look at what's going on in the PGM mining sector.